From FXEmpire, this is Chris taking a look at the British pound, and you can see that the pound has initially fallen against the US dollar to test the 115 level. Not a huge surprise, after all. That's what we've been doing for several days. You have to keep in mind that there are a lot of things punishing the pound right now. But as retail forex traders, we quite often make the mistake of not realizing that there is two sides to the story, and the other side is the US dollar strengthening due to a lack of dollar liquidity around the world. And while that's not necessarily an issue in the United Kingdom, it brings up the value of the greenback everywhere. All of these markets are interconnected. That's why arbitrage is no longer a thing. So at this point, I would anticipate some type of a bounce due to the Federal Reserve coming in and saying they're going to buy everything. But I am not willing to buy that bounce. And I think somewhere between 119 and 120, you're going to have a band of sellers again. And we'll just push this lower. After all, Boris Johnson talking about shutting down the UK, for lack of a better term, due to the coronavirus, is going to weigh upon this pair. I don't necessarily like selling on a breakdown quite yet. In a move like this, typically one of two things happens. You either get a little bit of a relief rally, or you have to go sideways and kill time. And 2 trading days after a move like this isn't enough time killed to build up the downward momentum.